Welcome to Power Charting. I am your host, Bruce Fraser. Today, scan the Wyckoff way, and we need Johni Scan for that. John Colucci. John, thanks for being here.
Great to be here, Professor. So great to see you again. We just came off a great seminar with Look Less, See More. Had some really great comments, great time doing it. Thank you so much for participating. Made it a great event. Thanks.
It was great, but the key to it was, John, is that, let's go here. So the key to it was that we talked about scanning from the perspective of Wyckoff. And it's long been held that you can't scan for Wyckoff. And I believe that you have changed that notion, that you've broken through to the concepts and methodologies that support scanning for Wyckoff setups. And of course, we're going to talk a little bit about that today. And that was what that whole program was about, those 3 sessions that we did. And so it's very exciting that you're bringing these new ways to scan into the context of the Wyckoff way. And so very exciting for all of our people.
Happy to do so. And there is a basic integrity to the logic of Wyckoff. It is not simple by any means, but it is elegant and it makes sense as you think it through. And those principles we can extract for the purpose of scanning. And we're going to show a little scan today based on one of your favorites, P&F, and very simple exponential moving average combination with P&F setup. Really looking forward to showing that.
Cool. Well, starting here, I'm going to take a few minutes to talk about green shoots with John's help. And this was a chart that I put up around July 20th is when I made it. But at that time, we were documenting the unfolding of this reversal off these key lows using the S&P and also the NASDAQ and so on. And so we had a throw under, oversold, and we had identified green shoots as far back as May. And now I'm seeing a lot of market watchers talking about oversold conditions and divergent behavior and things. Well, in Wyckoff, we are right there on the edge, looking for those characteristics in real time as they're unfolding. And so this is where the places are to make the low risk trades. And this is where we start our campaigns. I want to talk a little bit about that today. And over here on this point and figure chart, we can see this S&P chart fulfilled a redistribution count over here, through under the trend channel, stopped, and then started to build a cause. And we've said at the time that this cause could extend all the way back to these May lows, maybe even further, but definitely the May lows. Well, let's bring this chart up to date. And you can see here that this count became a little bigger. And the resistance area at 4150 is where we are right now. And we have a count up to 4450 off of this larger structure. And so we would look for the potential to rally even further into this count area, maybe even up to 4450 with a pullback, a backing up type action, and then which could either come up here or it could be here, and pulling back and building a bigger count potentially for an even bigger move. Now, it's a little too early to tell that, but we want to be thinking in terms of scenario building. But we were back in here talking about how to build swing trading positions in stocks. And we did workshops on that right here in Power Charting. And now we might even be looking at campaign type structures after this potential larger count comes to maturity. So with that, I just want to take a minute and take you to this is a blog that I wrote at the beginning of the week. And this blog has a chart of the S&P. You can click on it And you can see here, you can go in and really just go through the whole thing. This is a chart I started to document the distributional top as far back as September, October. And we've been just filling this chart out as we've gone along. Well, here's this area of green shoots. Let's take a minute and talk about what green shoots mean. We had green shoots off the March lows into this important rally. We've had green shoots in May, June, and July. So I didn't talk about that in the blog, but I want to talk about it with you now briefly. And so, John, oh, and also here's this higher resistance area around 43.50. Green shoots often show up as a form of breadth indicators. There are different kinds of breadth indicators: advanced declines, stocks above their moving averages, bullish percent indicators, high low, all kinds, and they're all good, and I like them all. But so we're just going to talk about the concept really today. And so, John, as you can see here, this is the bullish percent. And so tell us briefly what bullish percent is.
Well, in the simplest sense, it's a column of X's is at a higher high than a prior column of X's, and there is no corresponding sell signal denoted by the O. So it's X's and O's. You can read about it in stock charts. Very, very simple concept. A lot of activity can occur between a P&F buy signal and a sell signal, so you have to be careful with them. But very simple concept. We're going to use that to scan with today.
Fascinating. And bullish percent here is done in the aggregate. Chart on the left is all the NASDAQ composite stocks, and they all are looked at by the computer in aggregate. Computer just can be programmed to identify bullish percent buy signals, bullish percent sell signals, and it just aggregates that data to what you're seeing here. So this chart shows, let's just go ahead and show the February, really January to March area, higher lows in the bullish percent, lower lows in the NASDAQ composite. So that set up the green shoots for this rally. Definitely a tradable rally, but a rally in a downtrend. So now let's look at this. This is a higher low in June from the May low. May low got under 20% stocks in bullish percent uptrends. Very oversold condition. Well, this higher low to 22%, subtle but important, came with a lower low in the NASDAQ composite. Talk more about that in a minute. These are called green shoots, or this is what I call green shoots. And so let's look at the S&P composite, S&P 500 over here on the right. Green shoots in in February, March. I won't, you can see them, study them here. Lower lows in the index, higher lows sets up the condition for a more important rally. We as Wyckoffians start to look for good bullish candidates at that time. So, but look here, in gear down into the June lows in the bullish percent of all the S&P 500 stocks, and the index is making a new low at the same time. What does that tell you, John?
Well, not as happy as the NASDAQ, that's for sure.
Exactly, yes. And so if we see an opportunity, where do we want to go look for those opportunities, John?
Well, let's stick with the Qs.
Yeah, so stay with what's working, stay with the stocks that are showing that they want to lead the way. And let's say we don't even know how much of a rally it's going to be. Could be just intermediate bear market rally, and you decide you want to trade that. Some people don't trade bear market rallies. I don't blame them. So where's the playground you want to go play in? And so I would say that initially it's here, but look what happens now in the S&Ps. We get a good higher low in July, where we come from below 12% bullish percent up to above 30. And then we start to turn up and make higher lows in the index. So this is starting to be an in-gear up relationship. This, we can go, directionality is important in these breadth indicators. Directionality is up, we go with that, higher lows, looks really good. Here's another form of a bullish percent indicator. I'll go through that very, very quickly. What we have here, John, is the NASDAQ, all NASDAQ stocks on the left, the percent above their 50-day moving average. So if it's above the 50-day moving average, John, what are we implying with that information?
Possible uptrend.
It's if it's above the 50, we assume it's an uptrend. And if it's below the 50, we assume it's a downtrend. And so in the aggregate, we're looking at all of them in aggregate. Well, gosh, look at what happened in May. Under 7.5% of all NASDAQ composite stocks were above their 50-day moving average, 7%. That they were all going down. And so you could see that in the indicator on top, you could see it in the index. In this case, I'm using the NDX, the NASDAQ 100 for the bottom. And here are, look what happened in January to March, higher lows throughout. The more and more stocks were getting above their 50-day into the March lows, lower low in the index, higher low in the number of stocks, internal repair, green shoots, and it produces a beautiful rally, gets up to above 60% of stocks above their 50-day. And so here, look what we have. Higher lows into the June low, lower lows in the NASDAQ 100. The indexes were not reflecting the internal improvement in the market. So what do we want to do with that information, John? Go hunting, exactly. Yes. And and then on the right, you can see this is the New York Stock Exchange universe of stocks. And on the right, you can see the same concept, higher lows in the 50-day moving average, lower lows in the index into March. And then here you can see those are green shoots. And then look at the difference. The New York stocks made a lower low. They were deeply oversold, below 10% of stocks above their 50. That's a complete washout, huge, steep downtrend, and lower lows in the New York Composite Index on the bottom there. But look what happens thereafter. Higher lows into the July low, while the New York Composite goes down and tests its June low in July. And that sets up the green shoots for, look at the quality of the rally that we got subsequently in the New York. But the NASDAQ stocks moved first. So, and we had said at the time, NASDAQ looked like it was, these were the stocks that were acting better. And a big part of the reason that we said that was because you could see this taking place. So now here we're going to do a little exercise. You've seen these schematics before. These are accumulation schematics. And on the bottom there, you can see power charting. Let's review. That's a blog I did in 2015. Go look it up. So when green shoots appear, you can almost use this accumulation schematic to tell us this. And so you can see phase C is a spring, which is a lower low in the accumulation structure, which is exhaustion of the decline, similar to what we saw here in June, July, and then a rally into phase D, phase E, which is the beginning of a new, more important uptrend. Well, look here, we have in the schematic number 2, we have an LPS. This is a last test, which is a higher low. This is what many of those NASDAQ stocks were doing as the New York stocks were making lower lows. And so we want to go in and find these. This is why we have Professor Scan with us today, is that we want to find these in using our Wyckoffian scanning skills. And so you can see higher lows, lower lows. We want to identify these as the market's probing its lows. And so let's turn to one example very briefly. This is Brown-Forman. They're a distiller. You can see here, and I'll just show you this. You can study it on your own. lower highs, lower lows from the end of the year, November actually, to the May low, lower highs, lower lows in the S&P 500 in gear down. So Brown and Forman was matching the S&P. And then look what happens in June. Brown and Forman makes a very important rally, a reaction to a higher low, and at the same time the S&P is making a lower low. This is what we're talking about with those green shoots. We actually want to go in with our X-ray vision, and we want to identify those stocks that are doing that are making those green shoots indicators improve in the face of deteriorating stock index characteristics. And then the last thing I'll show you is just down here. You can see the relative strength is walking uphill and making higher lows with Brown Forman against lower lows in the S&P. And so it's just saying this stock is improving first, improving best, and then when it starts to rally with the market, it rallies better. And there were many stocks like that. Brown and Forman's just an example. It's not even the best one. It's just an example of how this works. Okay, John, any thoughts before we turn it over to you?
Well, the real key there is observing the relative strength as well as the price action. And I think that's a secret weapon that Wyckoffians rely on heavily, is the relative strength. Your thoughts, Professor?
Well, absolutely. And also we want to compare, and StockCharts is such a good tool for comparing two instruments against each other in these characteristics. I did a simple line chart. Look at how much it reveals. Just doing a line chart and looking at the rallies and reactions in relationship to each other. And you can just look at a lot of stocks that way. And the relative strength was very illuminating because it actually started to make higher lows beginning with the March low. So very, very telling. So John, one thing you do so well, now this is not about point and figure, we're not going to talk about that. But the reason I wanted to put this up here is because these are the areas where we as Wyckoffians want to get busy with our identifying good candidates for purchase in an accumulation structure. Phase C tests, phase D rally up to resistance, change of character in the advance, backups at phase D, and then phase E, which is the beginning of a big glorious new uptrend. So these are the areas that we want to concentrate on. Can you scan for this? Do you scan for this?
We can target those areas very, very precisely. And that was a big part of our scanning session.
Oh, well, this is what we're going to talk about today. So I'm going to shut up, turn the rest of the program over to John, and we will be right back. So it's very exciting that we now have a way to be able to use the scanning engine at StockCharts.com to be able to go in, drill in, and look for these best ideas. And the thing that we love about Professor Johni Scan is the way that he can do so much with so few lines of code relative to where these stocks are, and look at the characteristics for each of these different phases, structures in the accumulation, distribution, uptrend, etc. So John, with that, show us what you have here.
Very simple scan, kind of a takeoff on the idea of looking at bullish percent. Bullish percent to the positive side is a buy signal, is true. So we have in StockCharts the ability to say P&F patterns. We can choose it on a buy signal and add that language. But we're going to go one step further. We're going to say, give us an exponential moving average of 12 periods measured over 21 days that is positive. We're going to use the slope command for that. So we want an upsloping EMA 12. Of course, the EMA 12 is used in the MACD and the PPO. It's the fast average in those indicators. So we're going to borrow that concept. Then we're going to rank these by the rate of change over 5 periods. Gives the things that have moved the fastest and furthest over 5 periods first. Of course, we always check our syntax. We're good there. We run this scan.
And let me
And-
just say while you're running it here is that this is the kind of thing that happens when you get a character change in the late stages of accumulation. So we're contextual in Wyckoff. We know that the different phases have different price behavior. So when we get to phase C, final testing, phase D, rally up to the top of the accumulation area, phase E, the new uptrend, we can build those characteristics into the scan language. This is what John does so well. Go ahead, John.
So very, very simple scan, yet we end up with 600 results. So really, more than 50% of the population of these indices, there is some overlap between them, are showing positive slope on a 12-period EMA, and they're showing a PNF buy signal. And if we look at those,
and by the way, John, that is
Yep.
a measure of positive breadth. The breadth,
Yes.
I mean, there are times in the downtrend when you could hardly get any positive results from the scan.
Yes. So the scan result conveys a lot of information. You can see here, look at our top 3-4 stocks: NASDAQ, NYSE, NASDAQ, and that's reflected in the BP percentages in the charts that we saw earlier. Let's take a look at a couple charts. Look at this, up and out. So we're asking for the strongest ones first, and MELI has gone all the way up to the 200s, holding their positive OBV. That's nice. Relative strength just coming forward. What do you see here, Professor?
Well, it's beautiful. And of course, this looks like a swing trading candidate, but also a larger structure where we could have accumulation going all the way back to February, March of earlier this year. And so a pause here, maybe a backup, would be an opportunity to initiate positions and have tight stops. So that's personal preference item, but that would be potential tactics for a Wyckoffian.
Absolutely. So we're simply asking for a couple of conditions to occur. They're really not related to the position. Here is stock. Moderna had a very, very tough go, but look at the causality here and look at the green shoots that we see early on. Some leadership in that respect, even though it was terribly beaten down, it started to show a base forming. We have quite a bit of activity there. Nice downsloping backing up action there. And we're up and out to the 200. What do you think there, Professor?
Yeah, I think the big tell here was the spring in June, really good rally, change of character, and then the backup into the late July low, very shallow, narrow, lacks volatility. That shows absorption is taking place for some kind of a rally event. And these last 2 days of jump have really revealed that the stock seems to be, for the moment, in strong hands.
Absolutely. And then we have Amazon, big cap, well followed. Structure here. Look at May, green shoots back in May. Little bit of testing low, testing, higher low, higher low, higher low, soft pullback, out. We'd like to see that. Look at the OBV, the relative strength. 50s turning up, but still well below the 200. So we do have to be careful because we are basically trading a lot below the 200. Can be an issue.
Character of the relative strength is different than any other time in the history of the chart that we can see there. So it's very constructive improvement in the relative strength right there.
Absolutely. So lot of opportunity here. One of the keys is we start with a simple scan, then we start to add in language that helps us target exactly where that price is relative to support, resistance, or the midline of the structure. Went through a lot of that in our scanning special, Professor. Look Less, See More, and that's available on demand for anybody who's interested. But you get the flavor of the analysis that we were doing. They're very, very effective tools for the modern day scanner.
Well, and for people that don't want to scan themselves, and we'll keep doing these here and doing specials too, but for those that want to just have the benefit of the scans, is to go look at the Wyckoff market report, and they can see that at wyckofanalytics.com. And that's John's newsletter, which has the indexes, the top industry groups, the all the metrics, and then characterizes and identifies the different stocks based on their setups at the time. And so this is really a very powerful tool for those that want to have just the benefit of the scanning.
Absolutely. So you get different locations of price, springy events, including last points of support that are down low in the structure, up thrust, goes through resistance, pulls back in. And those have been very interesting lately because they ended up being minor signs of strength, pulling back in. They're going back out again. Really, really interesting. And we used to have 500-600 breakdowns per report. Now we have 19. That tells you a little something right there, wouldn't you say,
Breadth indicator right there, John.
Yeah, absolutely.
Very good. Yeah. Well, thank you so much for that. We'll keep doing these. We get a lot of requests for these things. And so thank you much for being here. And we will see you again next time.
Always a pleasure. Thank you.
Thank you, John.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.